We are back in the black hole of real estate, and today we're getting some news, and the ramifications of it are going to make a difference in how we approach real estate for years to come. This is your host, Ron Weiss-Sikarski, for the black hole of real estate, and it wasn't interest rates coming down, it wasn't big beautiful bills or Zillow in the news right now that's making my headlines. It's actually Rocket Mortgage. Okay, so you say, where did you pull that one from? Well, if you remember back a few months ago, we talked about it here. Rocket Mortgage has acquired and closed, and now they are the parent company for Redfin. Redfin has been one of the most searched websites for properties for quite some time. And maybe while it's not as big as Zillow or Realtor.com or some of the others, it's big. And Redfin has had agents for years and years. And when you hire a Redfin agent, they work closely with you, and the agents work for negotiated commissions through Redfin, so that they've got their network in place. They've got the search capacity, and they've got the agents, which is something that has been rumored for years, that Zillow would become a nationwide brokerage. They got the big search. They'd hire their own agents, and they'd freeze out the market. And if you didn't join them, then doom and gloom to you. Except for, we're finding that I think Rocket Mortgage beat them to the punch. They figured out a way to do it. Because they also gobbled up, the word I'm seeing here, gobbled up Mr. Cooper, which is the largest portfolio of mortgage servicing agent company in the country. So if Rocket Mortgage is one of the top mortgage companies writing a ton of mortgages, that's an advantage to them, because they already have the people who are looking to buy a property. They're pre-qualifying. So they have the leads, and they know that their leads, if you will, for an agent are super strong because they've already pre-qualified them. They already have their pre-approval letters out there. They know they can buy. They know their down payment. They know their closing costs. They know what the monthly payment's going to be. They know all of that information. So if you're to hand a real estate agent a qualified buyer who's with your company, and it's a seamless process because all you have to do is go find the property, then Rocket Mortgage might be a good partner for you. But what if you're with a company at Rocket Mortgage that also has realtors? Well, now you can say to your realtors, hey, by the way, join our company, join our Redfin, and we'll give you pre-qualified leads from Rocket Mortgage. Here they are, because we're all one happy family over here. And I'm not going to try to figure out all the logistics and all the disclosures that you have to do, because there will be some, hey, by the way, our parent company is Rocket Mortgage giving us leads, and by the way, we're working with Redfin and these agents. We'd love you to work with them. There's all this tethering. You do have to disclose all that. I'm sure they figured it out. I am sure they have enough money to hire the right attorneys to get the language correct. But there'll be some disclosures about that. But the hidden gem here is that Rocket Mortgage is getting new acquisitions every day for people who want to purchase things and they want to loan them money. But now they have a beautiful view of everybody who's currently holding a mortgage on a property that's making monthly payments. If they see that there's a lot of equity, they can offer a refinance as rates come down. They can see what your interest rate is. They have a really good idea of what you qualified at as far as your credit score and debt-to-income ratio, because they have an application somewhere in the system. There's a lot of intel at Mr. Cooper. So if Rocket Mortgage had all the servicing and a much bigger portfolio than they currently have, well, what an amazing concept. They're like, all right, you look like you're ready for a refinance. You have solid equity. Hey, you're missing a couple of payments. Maybe you need to sell. All the inner workings of this, it really stacks the deck in favor of Rocket Mortgage and all the companies that apparently it's going to dominate the market with. I mean, I could see this as being a good thing. Now, if you're an agent and you've been in business a long time and you're doing a job and staying in touch with, your clients, I don't think that you're going out of business. But if you're Zillow and trying to put this piece together, Rocket Mortgage just sprinted past you. because they have the three biggest pieces. Now they have an agent group that's been working at Redfin that's trained to those standards, and they bought the company. They must have investigated it and liked it. You've got the website platform, so you've got the real estate side locked down. You know who's applying for mortgages today, and you know already has a mortgage from the past. It's pretty brilliant. And I think they'll do well with this model, and they can offer incentives. Right now, if you were to look at what their offerings are, right now, home buyers that use Rocket Mortgage and are working with a Redfin agent, they can get a temporary rate buy down, 2-1 buy down. We've talked about those, or up to $6,000 in lender credits. See, this is where it gets super interesting. And these are inducements and incentives, but they're legal, and RESPA has nothing that they can do about this to say it's illegal because they've got all the documentation in place. So if you think about it, if you wanted to go to Rocket Mortgage and you just happen to type in low interest rates or interest rates on a mortgage, and you got on several different sites, because you're going to. Everybody's going to offer you teaser rates and frontline rates, and the rate that you see on the internet is not necessarily the rate that you're going to pay, because your interest rate is one thing, your APR is another thing. The APR just combines your interest rate and all the fees that go along with it. So sometimes the rate looks really attractive online, but by the time you add up all the fees, you could have achieved a different interest rate, maybe a little bit higher without those fees. Effectively, you'd be paying less money back even if your rate was higher. I'll say that again. Effectively, you might pay less money back over time with a higher rate if there wasn't all those fees attached. And a lender will show you the difference. What they will say is you get this percent with no points and no fees. You'll get this percent if you pay this many points and this many fees, and then you get to pick. It's all about the same thing. It's how you want to look at it. So if you like the idea of a low rate, fantastic, pay some fees. If you want less money out of pocket, take a little higher rate and pay it down the road. That's a way to do it. And you just ask them for an amortization table, and then you'll find out at the end how much you pay, including all the interest over 30 years on each side, and then you can make an informed decision on which one to have. But keep in mind, people move every 8 to 10 years, and most people don't go all the way through the 30-year mortgage. I would look probably 7 to 10 years down the road to see where you're headed, and maybe that's a good example. If you know you're moving in 5, I would just look at the first 5 years of that amortization table. So once you know where to look, the numbers really tell the story and make it easy to make a decision based on your current position. But what an advantage if you've been lured in by the internet and all the cookies that drag you to. Once you type in mortgage, you're going to get all kinds of things pop up, because that's how the internet works. It's all cookie based. So now you're going to see, hey, if you use us and we give you this great rate, everything will be good. But that's not all, because there's always, but that's not all. We're also going to give you $6,000 towards closing costs. Or if you prefer, you can use that $6,000 to buy down your interest rate temporarily for the first couple of years. And what usually happens is, if the front line rate is 6.5%, then year 1, you pay 4.5% interest. Year 2, you pay 5.5% interest. And the money that's missing is just a cash outlay that you pay up front. So you can write a check for the difference. So if you just looked at how much your mortgage payments would be at 6.5% for the first 2 years, and then you looked at the first year at 4.5% and added up that total of payments, second year at 5.5%, add that up, you're going to find the difference. That's how much you pay at closing to get that lower rate. And you'd say, well, why would you do that? And the reason would be simple. Maybe you can't qualify at 6.5%, but you can qualify at 4.5%. Maybe that's the way if they allow that in your qualification. Or maybe you just want a lower payment the first year or two so you can do some remodeling or buy some appliances or, I don't know, go out to dinner every so often. So these are real reasons. But the catch is you only get the $6,000 if you use the Redfin agent. And I do believe this will get the market share. You come in under Rocket Mortgage, and then They're going to direct you to a Redfin agent, which increases the likelihood that you don't go to a different lender. You see, you might come in on Rocket Mortgage, but if you meet a non-Redfin agent, they might have a preferred lender. And then what starts at Rocket doesn't end at Rocket. It ends with a different brokerage for the real estate side and a different lender. They get nothing for this. So this is locking down market share. It's a higher conversion rate for them. And then, of course, if you were to do this and use Rocket Mortgage and Redfin Agent, you're probably going to have your loan serviced. You got it through Mr. Cooper. So you're going to be linked to them in perpetuity because of the acquisitions that they made. And that's why I think that this is something that's going to make a big difference over the next 6 months and certainly for years ahead, because they're the first ones really locking this down. And Zillow, they beat you to the punch, and I think they got it going on right now. I'll be interested to see how Zillow overcomes this. They spent a lot of time on We'll Buy Your Home strategies and really appealed to a lot of realtors over the years for their preferred agent programs and the Zillow Flex programs. This is news. It might just help Redfin attract more agents. I think it's going to help Rocket Mortgage and their loan officers, and it's absolutely going to yield them more money through the certain servicing platforms. I think it's arrows up. Props to Rocket Mortgage. I think they did something really good over here, and I'm not endorsing them. I can't say that I've really used them. But I can still be impressed and on the sideline giving them a clap right now because they did something pretty extraordinary right now. If you disagree with me, let me know. If you agree with me, let me know. But I want to see your comments. This definitely is a reason to subscribe so we can keep bringing you this information and you get it first here. This is your host, Ron Weiss-Sikarski, talking about Rocket Mortgage for the black hole of real estate.